Assalamualikum OyaRahmatullahe OyaBarakatuhu. Innal hamdanillah wassalatu wassalamu ala rasulillah. Amma ba'd. Bismillahirrahmanirrahim. This is Muhammad Kamrul Hussain, Department of Business Administration, Metropolitan University, Sylhet. Welcome to my virtual classroom, MKA Classroom. Now let's start today's video tutorial. Now we will start goals of finance or financial goal of a firm, or you can call it the goals of business finance. So very important topic and very confusing topic of this day. What should be the main goal of a firm? Is it profit maximization or is it wealth maximization? Some scholars have said that profit maximization should be the goal, and another scholar said that wealth maximization should be the goal of the firm. Now in here we will try to discuss these two types of goals. One is profit maximization. After that we will discuss wealth maximizations. Wealth maximization goal of a firm. After that we will compare these two goals and we will emphasize which goal should be the better for the firm, and as well as several scholars emphasize which goals are valuable, which goals are best for the firm. Now we will try to discuss in here profit maximizations or wealth maximizations. Which one should be the goal of a firm? So we know that the profit maximization means maximization of EPS, earning per share. Profit maximization focus on EPS, earning per share, and wealth maximization focus on net present value. So it is simply that it is now you can tell which one is better. Obviously, as a student of finance, and talk that wealth maximization should be the main goal of a firm. Now here we will discuss one after another profit maximizations and wealth maximizations. First we will start from profit maximization. Profit maximization. Profit maximization. Profit maximization means maximizing the profit of the firms. In the economic theory, the behavior of a firm is analyzed in terms of profit maximization. While maximizing profit, a firm either produce maximum output for a given amount of input, uses minimum input for producing a given output. The underlying logic of profit maximization is efficiency. Some people believe that the firm's objective is always to maximize the profit. Some scholars believe that firm's goal should be the profit maximization. Here I said minimum input will produce maximum output. That is the profit maximizations. Minimum input. So, minimum input will produce maximum output. So, you have to remember that minimum input will produce maximum output, or a level of output will use minimum level of input. So, whenever you decide a level of output, it will use the minimum amount of input. That usually says that efficiency. That means if the firm has efficiency or efficient firm will always time maximize the profit. So, here has several scholars view that I am Pandey. Profit maximization means maximizing the currency income of the firm. Weston and Brigham, the maximization of the firm's net income is called profit maximizations. They tell us the what is profit maximizations. C.P. Jones, profit maximization is maximization of a firm's net income. Lauren Jack Gitman, to achieve maximization profit goal, the financial manager would take only those actions that were expected to make a major contribution to the firm's overall profit. So, from the above discussion, it is said that profit maximization means maximizing profit of the firm. To achieve this goal, the financial manager would take only those actions that were expected to make a major contribution to the firm's overall profit. For each alternative being considered, financial manager would select the one that is expected to result in highest monetary returns. Firms commonly measure profits in terms of earning per share, which represent the amount earned during the period on behalf of each outstanding share of common stock. That means this efficiency will tell us that maximize the EPS, earning per share, maximize the EPS. Those who has more common stock, he will earn more. That is the profit maximizations. So, this profit maximization has favorable arguments that the main aim is earning profit. Profit is the parameter of business operation. Profit reduces risks of business concern. Profit is the main sources of finance. Profit meets the social needs also. So, this has the favorable arguments. And it has also the unfavorable arguments. What is this unfavorable arguments? Profit maximization leads to exploiting workers and consumers. A level of input, maximum output. So, it tells that profit maximization leads to exploiting workers and customers. Profit maximization creates immoral practice such as corrupt practice, corruption practice, or unfair trade practice. Again, profit maximization objectives leads to inadequacies among the stakeholders such as customers, suppliers, public, shareholders. So, profit maximization objectives leads to inequalities. Remember that inequalities, it is create the inequalities among the stakeholders such as customers, suppliers, and public shareholders. So, these profit maximization tools has several drawbacks. Drawback. Criticism of profit maximization goal. So, first one, it is vague. It is vague. It is vague. It ignores the time value of money. Time value of money. It ignores risks. These are the drawbacks of profit maximization goal. So, first one, it is vague. It does not consider time value of money. It does not consider risks and return. So, first one, it is vague. In this objective, profit is not defined precisely or correctly. It creates some unnecessary opinion regarding earning habits of the business concern, and it also ignores the time value of money. Profit maximization does not consider the time value of money or net present value of cash flow. It leads certain differences between actual cash inflow and net present cash flow during a particular period. As also it ignores the risks. Profit maximization does not consider risks of the business concern. Risks may be internal or external, which will affect the overall operation of the business concern. Now, wealth maximization goal. Wealth maximization goal is one of the modern approaches which involves latest innovations and improvements in the field of business concern. The term wealth means shareholder wealth or wealth of the person, those who are involved in the business concern. Wealth maximization is also known as value maximizations or net present worth maximizations. So, this objective is an universally accepted concept in the field of finance. This wealth maximization tells for the net present value. So, a financial action that has a positive NPV or net present value creates the wealth for the shareholders, and therefore it is desirable. If a financial action regarding or resulting in negative NPV, it should be rejected because it would destroy the shareholders' wealth. That is why wealth maximization goal is the universally accepted goal of a business firm or finance or financial management or business finance or corporate finance or business finance, etc., etc., etc. So, some scholars said about this wealth maximization is that wealth maximization means maximizing net present value of course of action of shareholders. I am Pandey. C.P. Jones. The goal of firm should be to maximize stockholders' wealth, which is accomplished by maximizing the current stock price. Khan and Jain, wealth maximization implies the maximization of the market price of share. Now, from the above discussion, it is said that this is also known as the value maximization or net present value maximization. In current academic literature, value maximization is almost universally accepted as a appropriate operational decision criteria for finance. It removes the technical limitations which characterized the earlier profit maximization. We will see the favorable arguments for wealth maximization and unfavorable arguments for wealth maximization. First, favorable arguments. Favorable arguments. Wealth maximization is superior to the profit maximization because the main aim of business concern under this concept is to improve the value or wealth of the shareholders. So, wealth maximization goal is to enhance the value of wealth of shareholders. Number 2, wealth maximization considers the comparison of the value to cost associated with the business concern, total value deducted from the total cost incurred for the business operation. It provides exact value of the business concern. Wealth maximization considers both time, value of money and risks for the business concern. Wealth maximization provides efficient allocation of resources. It ensures the economic interest of the society. As like it has several unfavorable arguments, that is, wealth maximization leads to prospective idea of the business concern, but it may not be suitable to present day business activities. Wealth maximization is nothing, it is also profit maximization, it is indirect name of profit maximization. Wealth maximization create ownership management controversy. Management also alone enjoy certain benefits. The ultimate aim of wealth maximization objectives is to maximize the profit. Wealth maximization can be activated only with the help of the profitable position of the business concern. Again, there has the rational things for wealth maximization. It increase the market value. Wealth maximization principle implies that fundamental objective of firm is to maximize the market value of its share. Rationally of wealth maximization. So, it tells market price increases, or market value increases. Wealth maximization principles implies that the fundamental objective of a firm is to maximize the market value of its share. Economic welfare, economic welfare, economic welfare. Maximizing the shareholders' economic welfare is equivalent to the maximizing the utility of their consumption over time. Then cash flows. It is important to emphasize that benefits are measured in terms of cash flows, which is important for investment and financing decisions. Select discount rate. By selecting an appropriate rate or discount rate, which is called cost of capital, for discounting the expected cash flows of future returns. It also consider risk and return. So, the objective of shareholders wealth maximization takes care of the questions of risks of the expected returns. So, wealth maximization's objective should care of it. And lastly, it takes care of the time value of money. These objectives care about the time value of money. So, the wealth maximization objective makes a decision, makes a distinction between returns received in different times. So, it considers the time value of money in the different periods. That is why by the discussion of this matter, rationally or favorable arguments rationally to the wealth maximizations or favorable arguments of wealth maximizations. So, it is clear that wealth maximization is the superior to the profit maximizations as the operational objective. Wealth maximization achieves the objectives of the firm's owners and interested parties. So, it should be the main goal of a firm. Now, we are trying to discuss in here the difference between profit maximization and wealth maximization. We will try to differentiate between these two goals in here. The difference between profit maximizations and wealth maximization, we will insert a image which will help us to show the difference between profit maximizations and wealth maximization. So, this is the photograph which is said the difference between profit maximizations and wealth maximizations. First one, definition. Profit maximization tells that profit maximization means maximizing the profit of the firm. Maximization of the firm's net income is called profit maximizations. Then wealth maximization means maximizing net present value or wealth of course action of shareholders. Subject matter: to increase profit volume, to increase wealth, not profit. Risks would not be considered, but risks would be considered. Time value of money, here consider the time value of is not considered. Time value of money is not considered profit maximization's goal. Time value of money is considered here. inflation. Inflation would not be evaluated. Wealth maximization, inflation is evaluated. Concept, it is ambiguous concept or vague concept. It is not the vague concept or ambiguous concept. Welfare, social welfare is not considered. Here social welfare is considered. Keep interest, it keeps interest only for owners, it keeps interest for all interested parties of the firm. Indicator, it indicates increasing EPS, it indicates increasing share price. Comment, last one comment. Profit maximization should not be the goal of the finance as well as firms, but wealth maximization should be the main goal of the finance as well as the firms. This all about today. Stay home, stay safe, try to maintain a safe social distance, try to wash your hands frequently in a day. Subhanaka Allahumma wa bihamdika ashhadu an la ilaha illa anta astaghfiruka wa atubu ilaika. Assalamualaikum warahmatullahi wabarakatuhu.